Hello guys, in this video I will talk about premium discount and FIPS and everything. I will try to explain why it works, how it works, and yeah, let's start. So the premium is above the 50% of a range and discount is below. And all the FIB levels that are in the discount, they're basically the lower level, the more discounted the price is, basically. So it's not like a magic level or something, magic FIB, nothing like that. The lower the price goes, the more discounted it is, the better it is to buy. It just makes logical sense. So I will now measure all these ranges and show you something. Price always tends to react from these ranges because of the standard deviation of the price. This is how it works. The lower it goes, it's basically cheaper. It is better to buy. It just makes logical sense. It's just normal. The lower the price, the better it is to buy. These boxes, this is basically the OTE. A bit changed. I will talk about it in the next video probably. Doesn't really matter because it's not like a magical level. It's just the more discounted the price is, the better it is to buy, and some of these levels are just reacting a bit better. But now I will show you something interesting that I've never seen on YouTube or anywhere before. So basically, there is an indicator that's called Bollinger Bands, and a lot of people use it, but in a wrong way. I don't use it personally, but I want to show you for the sake of the video how it works. So basically, it's how the price deviates from the average. And usually when we're under the 50% of a range, we go below the Bollinger Bands and we have a big reaction of it. And as you can see in this case, this is exactly how it worked. I'll go now to 1 hour. Every time we go into these levels, we are in heavy discount. And then I will show you something even more interesting. This is a pretty hot topic nowadays in trading. People talk about the standard deviations from ICT. And I will show you that it basically aligns with these levels, also with the Bollinger Bands. It's all the same stuff. It's nothing magical. When we're trending, the last manipulation of before going down, before the correction, for the corrective move, the price nearly never goes under these zones right here, and it aligns with the FIB. So not only the price reacts here, it also reacts here, and then after going to the extreme of the standard deviation, which is in my case 4.5, we just tap into it. We have a level of liquidity here, and it almost looks like staged or something because it works every time. Look at this. So it's nothing magical. It's just maths basically. So in this case, in this price range, on the 15-minute on Nasdaq. Every single manipulation high gives a reaction of the standard deviation, and it only works when we have some sort of level there, because there's not a lot of confluences here to buy, but here we have this hidden base and then we react off it. We also swap this low, same thing here. Liquidity, some sort of level here, and react off it. And it always aligns with the premium and discount of the range. So if we measure the whole range like this, it's not precise, but you can see every time we go under the line, we have some sort of buy opportunities. And then if you want to be even more precise, we measure specific ranges like here, and like here. So basically this part is discounted, this part, and then if we delete this, if we want to be even more precise, we can measure the OT, and then we have these crazy entries every single time, even without like levels, PDRAs, however you want to call it. In this case, we didn't come back to the discount of the range. But then if we go to the lower time frame, look at this, and then it aligns with the Bollinger Bands, because it's not about the levels, it's about the price deviating from the average. And yeah, I just wanted to show you this so you understand why I look at price in the way I look at it. More of an informative video, but now I think it could open your eyes for a lot of new opportunities, and you can now understand my analysis a bit better. And yeah, see you in the next one.